Have you ever looked at a financial report and just felt, well, a bit overwhelmed? Like there's gold in there, but it's buried under mountains of data.
It happens all the time. It's easy to get lost in the numbers.
Exactly. But imagine having someone help cut through that noise, get straight to the point. That's what we're aiming for today.
Mm-hmm.
We're doing a deep dive into Advanced Enzyme Technologies, Ltd. You might know them as AETL.
Right. They're a pretty big player, a global leader, actually, in enzymes and probiotics, stuff that works behind the scenes in, well, loads of things.
Food, medicine.
Yeah.
Yeah. And we're digging into their latest numbers, the Q1 FY26 results for the quarter ending June 30th, 2025.
And not just the numbers. We've got the board meeting details, their earnings presentation, the press release, the whole picture.
So our mission really is to pull out the key takeaways for you. What are the main figures? What's driving those figures?
And maybe most importantly, what does it suggest about where AETL is heading? Can they keep up this kind of momentum?
Let's jump right in then. The big picture numbers for Q1 FY26, they look pretty strong. Revenue hit $1,859 million.
Which is what, compared to last year?
That's a 20% jump compared to Q1 last year.
Sure.
And it's also up 11% from the previous quarter, Q4.
Okay, so solid growth both ways. That
Yeah.
consistency, year on year and quarter, that tells her something.
Was it signal to you?
Well, it suggests they're not just riding a market wave. It points to strong market positioning and, frankly, effective operations. They seem to be executing well.
Makes sense. And growth is one thing, but profitability, that's where it gets really interesting. Consolidated profit after tax, the PAT,
Yeah.
climbed to $404 million. Now, that's up 16% year on year, which is good,
Decent. Yeah.
but it's up a huge 51% compared to the last quarter.
Wow, 51% quarter on quarter. That's quite a leap.
It really is.
And you usually see that reflected elsewhere, right? Like in EBITDA.
Exactly. EBITDA was up 10% year on year, reaching $564 million, and quarter on quarter, up 24%.
Okay, so the underlying operational profit is also accelerating nicely. And margins.
Still looking healthy. EBITDA margin was 30%, and the PATMI margin came in at 22% for the quarter.
So they're not just growing revenue, they're managing costs effectively, too. That combination is key for, sustainable profit.
Definitely. So with profit up, what about earnings per share, the EPS, for shareholders?
Let me guess, it probably mirrored that PAT growth.
Spot on. EPS for Q1 was 3.57. That's a 17% increase year on year, and bang on that 51% increase quarter on quarter.
Right, so a much stronger earnings picture for investors this quarter. And anything from the auditors? Any flags?
Nope, seems solid. They gave an unmodified conclusion on both the standalone and consolidated results.
Good. That adds confidence, means the reporting looks sound.
Okay, so those are the headline figures. Let's unpack this a bit. AETL has different business segments, right?
Correct, several key areas.
So where did this growth really come from in Q1? Which segments were pulling the weight?
Well, the biggest chunk, as usual, is human nutrition. That's about 66% of their total revenue.
And how'd it do?
It grew a really solid 21% year on year, hit $1,221 million. A lot of that was driven by their pharma and API business within that segment.
API meaning active pharmaceutical ingredients.
Exactly. And it was also up strongly 19% compared to the previous quarter. So consistent demand there for sure. It really shows that focus on health, enzymes, probiotics. It's a strong market.
Okay, human nutrition leading the charge. What about animal nutrition? That always sounds like a fascinating growing area.
Oh, it absolutely is. And their performance here was, well, pretty remarkable, actually.
How so?
Up 51% year on year. 51%, reaching $160 million.
Wow.
Yeah. It's now 14% of their total revenue. That kind of jump really suggests their bet on things like probiotic enhanced animal feed is really paying off. You see that trend globally focus on gut health, natural immunity, and livestock.
Makes total sense. So strong performance there. Were there any segments that maybe faced more challenges?
Yeah. Yes, there was one area that saw a bit of a dip, the industrial bioprocessing segment.
How much does that account for?
It's about 13% of revenue. It actually saw a 6% decline year on year, down to euro 236 million. And sequentially, it was down 15%.
Any specific reasons why?
It's a bit nuanced. Within that segment, their food-related business was down 11% year on year. But the non-food part of industrial bioprocessing, that actually grew 11%.
Huh. So a real split within that segment.
Exactly. Shows different dynamics at play, some headwinds in food applications maybe, but resilience elsewhere.
Okay. And the last one, specialized manufacturing.
Right. That's about 7% of revenue. It did really well year on year, up 29% to 142 million.
Strong growth.
Very strong year on year. Though it did see an 8% dip compared to the previous quarter. It might just be timing of projects or seasonality, perhaps.
Okay, so putting all these pieces together, human and animal nutrition powering ahead, industrial bioprocessing a mixed bag, specialized manufacturing strong EOY. What does this tell us overall about their strategy or the market?
I think it shows they're successfully playing to their strengths, particularly in health, both human and animal. That's clearly where the momentum is.
Right.
They're navigating some specific challenges in the industrial space, but the key thing is diversification. Having these different streams helps cushion against a slowdown in any one area. It looks like a pretty resilient setup.
Okay, that makes sense. Now, AETL isn't just an Indian company, they're global. How did sales break down geographically in Q1?
Good question. It's quite balanced, actually. Domestic sales in India were 53% of the total.
And growth there.
Very strong.
Oh.
Up 32% year on year, reaching 979 million. India is clearly a key growth engine for them.
And international.
That made up the other 47%. It grew 9% year on year to 881 million. Solid growth, but definitely slower than domestic this quarter.
Right. And within that 47% international, this is where it gets really interesting, looking at the different regions. Do they all perform the same?
Not at all. It was quite varied year on year. The Americas actually saw a 4% decline.
Oh, okay. Any idea why?
Could be various factors, inventory adjustments by customers, maybe specific market conditions. Hard to say from just this data.
But other regions?
Did much better. Europe grew a strong 23%. Asia, and this is excluding India, surged by 59%.
59% in Asia ex-India. Wow.
Yeah. And the rest of the world category was up 61%.
So really strong growth in Asia and other emerging markets then.
Absolutely. That's a key takeaway. They seem to be successfully expanding beyond just the traditional U.S. and European market, tapping into those high-growth areas.
That's a dynamic picture year on year. What about quarter on quarter? Did we see the same pattern?
That's where things shift a bit. Sequentially, so comparing Q1 to the previous Q4,
Yeah.
domestic sales kept powering ahead, up 39% quarter on quarter. Really strong momentum.
But international?
International sales actually declined by 9% sequentially.
Oh, interesting. So the opposite of the domestic trend. What drove that decline?
It seems to have been broad-based internationally, quarter on quarter. America's down 13%, Europe down 10%, Asia ex-India down 2%. Only the rest of the world showed sequential growth.
So it looks like for this specific quarter, Q1, there was a definite shift in focus or momentum towards the Indian market.
Exactly. That domestic strength really carried the overall sequential growth. It's an important nuance for you, the listener, to note.
Definitely. Okay, moving beyond the numbers themselves.
Yep.
What about strategic moves? I saw something about an investment in a new subsidiary.
Yes, that caught my eye too. The board gave the green light for a $10 million investment in a company called Advanced Enzyme Private Limited, or ANPL.
And it's new.
Brand new. It was only incorporated on July 4th, 2025. It's set up as a wholly owned subsidiary.
And what's its purpose?
Basically, sales and distribution of AETL's nutrition and wellness products. The plan is to get that investment done by the end of October 2025. It's a 100% equity stake, so they'll have full control.
So how does this new subsidiary fit into the bigger picture, especially with human nutrition doing so well already? Is this about accelerating that, or maybe a different approach?
It seems like a very deliberate strategic play. What they're planning to do, essentially, is take their successful direct-to-consumer model, their B2C model from the U.S.,
Right.
and replicate it here in India. They've launched a new nutraceutical brand called Welfa.
Welfa, okay.
Yeah, and ANPL looks like the vehicle to drive that brand, offering products directly to Indian consumers, things for immune support, skincare, gut health, weight management, you name it.
So move into the B2C space in India, leveraging their human nutrition strength.
Exactly. Expanding digital sales channels, targeting consumers directly. It's a new, potentially high-growth avenue for them in their home market.
Makes a lot of sense. So besides this B2C push with Welfa, what other areas are they focusing on for future growth? What are they betting on?
They've highlighted a few key drivers. Probiotics remain central. They want to keep launching more products, both for humans, like in immunity and active health foods, and for animals, too.
Yes, same focus there. Immunity, digestion, better nutritional value in feed. Then there's biocatalysis.
Biocatalysis, what's that exactly?
It's about using enzymes, very specifically, to help make pharmaceuticals the active pharmaceutical ingredients, or APIs. The goal is to make the process faster, use less energy, fewer harsh chemicals.
Sounds promising.
It really is. And they mentioned some products are already in advanced trials at manufacturing plants. So that could be significant down the line.
Any other areas?
Yes, baking. That falls under their bioprocessing segment, the part that saw mixed results this quarter.
Right.
But they're saying they're getting good feedback on their baking enzymes and are looking to expand sales into Europe, the Americas, other global markets.
And they mentioned something about approvals in Europe.
Yeah, that's important. They've submitted 15 food enzyme dossiers to EFSA, the European Food Safety Authority. 9 of those have already got positive opinions. That's a big step for market access there. It certainly sounds like R&D is critical for all this.
Yeah.
And they also mentioned inorganic expansion, right? Acquisitions.
Absolutely. They stress their ongoing investment in R&D infrastructure as a core driver of innovation, but they also have this history of smart acquisitions.
How many have they done?
4 in the last 9 years or so. And here's the impressive part. They financed all of them internally.
Internally. So no borrowing for acquisitions.
Correct. They've maintained what they call a zero debt status throughout.
Wow. That's quite disciplined for a company pursuing growth.
It really is. It shows a combination of internal innovation strength and a very calculated, financially prudent approach to external expansion.
Okay, so we've looked at the numbers, the segments, the geography, the strategy. Pulling it all together, what really makes AETL stand out? What's their sort of unique edge?
Well, if you synthesize everything, several things make up their unique investment case, as they might put it. First, it's a very specialized field. Enzymes, probiotics, there are high barriers to entry. You need deep scientific know-how.
Right, not just anyone can jump in.
Exactly. Second, their R&D capability is clearly a major strength. They've been investing heavily for over 15 years, constantly developing new enzymes, going from just 7 back in the 90s to over 68 now. That's significant innovation.
Definitely.
Third, they're integrated. They do everything from the initial research through manufacturing all the way to marketing. That gives them control over the whole value chain.
Plus the experienced leadership.
Yes, the technocrat promoters, the founders, have decades of experience. That kind of deep industry knowledge is invaluable. And then there's cost competitiveness.
They mentioned being one of the lowest cost manufacturers globally.
They position themselves that way, yes, which is a huge advantage in a global market. And finally, just the sheer diversification.
Across products, customers, and geography.
Precisely. Over 400 products, 700 plus customers worldwide, presence in 45 plus countries. That inherent diversification provides a lot of resilience.
It really paints a picture of a company that's built on a strong foundation, with a clear vision. It's more than just the quarterly numbers, isn't it?
It absolutely is. It's about the underlying capabilities and the strategic choices that drive those numbers and set them up for the long term.
So we've really covered a lot of ground today on Advanced Enzyme Technologies Q1 FY26. We saw that impressive growth in revenue and profit.
Driven strongly by human and animal nutrition. Yeah.
And that interesting geographic story, strong domestic growth, big gains in Asia ex-India.
And that strategic move with the new subsidiary, ANPL, to target the B2C wellness market in India. That's one to watch.
Plus the ongoing focus on R&D, biocatalysis, and that disciplined zero-debt approach even with acquisitions.
I think what's really fascinating is seeing how they leverage decades of deep expertise. You know, using that R&D not just for the core business, but to push into these new high-potential areas.
Like biocatalysis and the direct-to-consumer market.
Exactly. And doing it all while staying debt-free. That shows real financial strength and discipline.
So for you listening in, maybe the next time you see enzymes or probiotics on a label, could be food, could be animal feed, could be a supplement.
Yeah, take a second to think about the complex world behind it. Companies like AETL working diligently, often unseen.
And maybe a final thought to leave you with.
Go for it.
Think about how these tiny things, enzymes and probiotics, these sort of life catalyzers, as they're sometimes called, they're becoming fundamental in so many different industries, quietly changing everything from how we stay healthy to how we make things more sustainably.
It makes you wonder, doesn't it? What other areas could they transform next? What unexpected applications might emerge? And what could that mean for, well, for all of us?